Hey, what's going on, guys? It's Ricky with Tech Solutions. Hope that you guys are all having an amazing Sunday. Today's October 20th. It is 6:46 in the afternoon, or whatever it is that you want to call it, at night. And tomorrow market's going to be opening. We have a pretty interesting week this week, and I thought that we could talk about a series of different stocks that are set to report earnings. Big tech is going to be reporting earnings starting this week, with Tesla being one of the bigger ones that we're going to be focusing on. And then in the weeks that follow, we'll have Microsoft, Amazon, Nvidia, all of the magnificent seven, as they like to call them. But I just wanted to make sure that you guys were aware. So if you have or carry any open positions with those, it doesn't mean that you have to sell, but at least you will not be surprised if and when they report earnings. So let's go ahead and start sharing my screen. If you have any questions whatsoever during this live stream, all I literally ask you to do is to share it in the live chat. So again, it's absolutely for free to partake in this live stream. I go live every single Sunday for this Sunday Stock Talk, and it's free to tune on in. And it's going to be, again, you just have to subscribe to the channel, and hopefully I earn your thumbs up in this video. So the first one that I quickly wanted, or the first thing that I want to talk about is, again, this is the S&P 500, SPY, which is the S&P 500 ETF. You can see that we're pretty much at all-time highs. So for those that are not aware, that's watching the market for the first time, you might be completely new to this. First off, you might be looking at this and you're like, oh my goodness, like what am I looking at? This looks so complicated. All I can express to you is it's kind of like your phone, right? Your phone's very easy to use now because you use it every day, right? So you become a creature of habit because you're very aware of what and how to do things on that very complicated device. But again, if you give it to someone that's never seen a phone, it's going to be very overwhelming because there's so much that phone can do. And I think that's a great way to kind of express this, is that there is a lot going on, but when it comes down to like looking at one specific thing, again, if I'm trying to look at the charts to perform a technical analysis, I'm really just mainly paying attention to this. I'm asking myself, hey, is this thing, is it a bullish stock? Is it a bearish stock? Is it a stock that's, very volatile? Is it pretty consistent? And I can see very quickly that S&P 500, right, SPY, it's very consistent. It's very bullish. It's bullish for a long period of time. Looking at the day chart, where every candle represents one day, right? That's the time, or one candle represents one day. You can see that it's incredibly bullish over a long period of time. You can see that this pullback was back in the end of 2022, and we've been indicating signs of an uptrend ever since then. There are pullbacks along the way, which again, that's a great time to be able to load up and to buy when the market sells off. I personally do not like buying when markets are at all-time highs or extremely overextended. It's just my 2 cents. Just because I don't do that doesn't mean that you shouldn't, especially as companies are about to report earnings. I don't know why, but I've been hearing through the grapevine that there's more companies that are laying off people, more than what was originally expected. And remember, companies reporting better than expected earnings, that's good, but a big part of earnings season is also guidance. What's to come for up and coming quarters for 2025? Is it something that's still going to satisfy investors? And if it doesn't, think about this: the perfect recipe for a possible pullback. We're at all-time highs. Markets are thriving. So what could go wrong? Well, if guidance is not as good as expected, and a lot of these companies begin to lower expectation, then markets can begin to pull on back. And it wouldn't take much because markets are extremely overextended. So therefore, they're extremely delicate to any negative news that might justify some form of slight correction. Corrections should not scare you. They happen all the time. And by corrections, I mean little pullbacks, right? If you look at this on the day chart, you can see that this thing pulls back, from time to time. It rallies, and then it has these little pullbacks. A great time to buy, right? Because they recover. A pullback, a great time to buy as they recover. A pullback, again, during that short time frame, maybe that week to 2 weeks, it might be kind of scary because, oh no, the market's selling off. But when it finds its support, as again, it's more bullish than it is bearish, it's a great time to load up on companies that you believe in and that show signs of continuous uptrend pattern, as again, they do begin to recover and you can make money on that recovery. And this is why Warren Buffett says, be greedy when others are fearful, and be fearful when others are greedy. And I could ask you a very simple question. Do we think that markets are greedy, or do we think that markets are fearful right now? So again, when trying to use that kind of like philosophy to invest or to trade or to know when to be aggressive or light in your position, I think it makes it a little bit easier to understand of, you shouldn't be afraid to carry a position right now just because we're at all-time highs, because markets could technically continue to rise. So it's very good to be self-aware when it comes down to that. But with that being said, you can also not be surprised if markets do begin to pull on back, which again, if you're light on your position now and markets do pull on back, it's a great opportunity to then be able to have cash on the side to be able to load up when markets do pull back for a better deal and then make money on that recovery. At least that's the way that I like to trade or invest. So let's go ahead and jump right into it. So the first company that I quickly want to talk about, I'm going to list 3 different companies that I'm going to be watching for this week. If you have any stock that you would like me to break down, all I literally ask you to do is to share it in the live chat. Just share the company's name and the ticker symbol and maybe why it is that you see value in. So Tuesday, before the market opens, Verizon is set to report earnings. I personally want to pay attention to Verizon and if it actually exceeds expectation. The reason why, there's actually 2 companies. 3M is also a company that's performing really, really well. And I'm just aware of that because I've been paying attention to it, not because I want to invest in it, but it's just, again, a stock that I come across during our live trading sessions with our LPP team. It gets brought up from time to time, so I become a little bit more aware of specific stocks if, again, they're presented to me on a consistent basis. So Verizon is set to report earnings. It's retesting previous highs, and this is just on the technical standpoint, right? You guys can see that it came from lows of $28 and now it's nearly doubled at highs of $44. So an amazing recovery. But again, Verizon has been a company that went from highs of 49 all the way down to lows of 29. So when asking the question, is it super cheap? Is it a really good deal? No, but can good news come after it reports earnings? Of course, if it exceeds expectation and begins to wow investors for guidance of 2025, then this thing could continue to rally. The rally can continue, no question about that. But it is so overextended that we cannot be surprised if this thing does begin to pull on back. And I would say that it's a very similar setup when it comes down to 3M. 3M is a stock that was struggling, lower highs, lower lows, a consistently bearish stock. Then it found its bottom at $81. How fortunate, right? It then began to recover, and now it's trading at highs of 135. This is just my personal opinion. And again, you guys can do your own due diligence. This stock to me looks extremely overextended. I hope that the good news continues to follow for 3M so it could recover from this devastating pullback that it's had since its overall highs of 201. But I just want you guys to see the bigger picture. It was a stock that was incredibly bearish and then began to indicate signs of a recovery. We've been lacking progress on the upside. We've kind of just been consolidating, and that's normally a sign of a resistance before a stock begins to pull on back. So this is one that I would love to pay attention to Tuesday, because before the market opens, it's going to be reporting earnings, and we will see if it exceeds or drops after its earning report comes out before the market opens. The other one that I quickly want to talk about is on the opposite side of that spectrum, and that's Boeing. Boeing has been getting demolished. And I'm sure a lot of you guys have been hearing all the news about the whistleblowers and all of the accidents and all of the fines, right? And the settlements when it comes down to Boeing. Boeing has been getting destroyed with lower highs, lower lows. It is an extremely bearish stock. Now, can it get cheaper? 100%. Let me get a show of hands of how many people have bought the dip on a stock and then it continues to dip. I've done that. It's one of the worst feelings. So one of the biggest mistakes that a lot of beginner traders make or investors make is that they buy it because they think it's cheap and that, oh, okay, well, it has to recover. Well, nothing has to happen. And sure, eventually it can, but right now it's kind of going through this like negative rut, right? This market sentiment when it comes down to Boeing is not bullish. So instead of predicting or hoping to predict the future, one step that we can take as traders is to wait for confirmation of an uptrend. So when a stock is done selling off, it should therefore then begin to indicate signs of a recovery. We don't have that confirmation of a recovery just yet. And again, Boeing is going to be reporting earnings before the market opens on Wednesday. So please make sure to add that to your calendar. And the one that I'm sure a lot of you guys are aware of that's reporting earnings this week is Tesla. Tesla is set to report earnings after the market closes, and that's going to be on Wednesday, if I'm not mistaken, right? This is going to be Wednesday after the market closes this week. And I wanted to ask you guys, do you guys want me to host a live stream for Tesla's earnings? We definitely do not have to, but I know a lot of you guys, I like Tesla. A lot of you guys like Tesla. We held a live stream for that robo-taxi event, and a lot of you guys showed up. So you let me know if this video gets enough likes. I'd be happy to do so. If not, no question about it. We do not have to. Tesla was going up in preparation to this robo-taxi event. And then since the robo-taxi event, unfortunately, it's been selling off. Lower highs, lower lows, big gap down. But if you look at the larger time frame, you can't be surprised. Tesla's kind of been struggling. It's had its resistance at highs of 270, meaning that it's kind of struggling to break above $270 per share. And it's had a general support range right around lows of 170 to 200. So that's a good understanding, a good range to understand when it comes down to Tesla for oversold and overbought levels. And again, this can completely change when it comes down to these companies reporting earnings. There just has been slower demand for a lot of these EV vehicles than what was expected. So if that is showcased when it reports earnings, that they are producing less revenue, that there's less demand, and that guidance possibly could be lower for 2025, then although Tesla has sold off, it could sell off even more. If they come with a huge surprise that demand has picked up and that they have great expectations or guidance for 2025, then expect a great recovery. But again, this is why I personally don't like to predict or hope that I can predict a stock before it reports earnings. I wait for the market to react. Remember, just because I do that doesn't mean that you can't or that you need to, but I think it's just the safer play, especially if you're a complete beginner and this is the first time that you're really watching companies as they report earnings. There's nothing wrong with just watching. It's really interesting to see how the market trades leading up to a major earning report and then how it trades after. You'll see very volatile moves, the day of, maybe the day after, but then you always can follow up within a week after reporting earnings, and then you can see that it kind of begins to cool off, right? So it's very interesting. It's one of my favorite times to pay attention to these stocks, and I hope that you can share that same experience as you watch it for the first time. So, hey, Ricky, just curious on why you're not a fan of options, buying or selling. Yep, I don't trade options myself. I have a lot of beginners that watch my videos, and ever since I started making these videos back in 2015, just to kind of age myself, I quickly began to pick up. Fortunately, I never traded options myself, but I quickly saw how devastating and how risky options can be for beginners, because again, when those options expire or at the rate of decay, depending on that delta, it could completely blow someone's account. And that's just not the approach that I personally want to have with the way that I trade. And I don't think it's the safest way for a lot of beginners. When it comes down to shares, even if a trade does go against you, you always have the option to sell those shares. And although you might sell it at a lesser value, it's a little bit more of a controlled condition or variable, right? With that being said, options do yield a much greater return. And I think that's why, right? Although I might not do it, with greater risk comes greater potential reward. I just think that you need to learn how to walk before you run. So I don't think it's great for beginners to start with options, but if you begin to trade with shares and you're doing well, and then you want to transition into options because you have a good edge, you have good risk management, and good position size management that you think that you can make that transition, all power to you, right? But again, you need to learn how to walk before you run. And I mainly focus on working with beginners. And I'm sure if you've ever watched any of my videos, I'm highly fixated on managing risk because I know how dangerous and how risky the market can be, even with shares. So that's personally why I choose not to trade options. But again, just because I don't doesn't mean that you shouldn't. I'm just expressing the risk behind it. I hope that makes sense. Correct. Yeah, options are cheaper. That's why it's cheaper to buy options versus 100. Yeah, but when you don't have a good foundation and you're just getting into the market, you treat it less of it becomes less of the actual trade itself and becomes more about, I just want to try to make the most money as quick as possible. As you know, that's what a lot of beginners want to do. And I would rather slow things down and try to encourage beginners to build healthy habits as much as possible. It's not that it's going to be perfect or that even works for every beginner, but I would rather start with that slower process and then allow them to kind of scale and flourish in whatever avenue they choose to take in the stock market. So again, you asked me and now I answered when it comes down to that. So, all right, let's go ahead and break down. I want to break down 2 stocks for you guys. So if you have any stock that you would like me to break down, all I literally ask you to do is drop a thumbs up. And as long as you're subscribed to the channel, you should be able to share your ticker symbol in that live chat. So we have Dean B with Meta. Would be happy to break that one down for you. So Meta was very close to previous all-time highs. Let's look at this on the day chart. Yep. And I think that this is a great example of a stock that has been absolutely killing it with higher highs and higher lows. It became incredibly overbought and it's just kind of correcting itself. Meta has been so incredibly bullish that it has small pullbacks. The first 2 were a little bit more significant, but that's the beautiful thing, that if you want to invest in Meta, I think a better time to possibly, the time that I would personally want to buy is maybe when it retraces closer to the EMA and then begins to show signs of a support and a recovery. If you're part of my LPP team, right, when you sign up for LPP, you not only get access to our daily live trading sessions, but you also get access to our A to Z video lesson library. And in that lesson library, I talk about the 3 stages of a reversal and the different steps that I take to kind of be able to buy into these pullbacks to be able to make money on the recovery. So just like in the past, it has sold off, buying into that pullback, and then looking for those signs of recovery and making money on that recovery, and then locking in profits either at previous highs or at new all-time highs. It does it over and over and possibly over again. And that's what I would look out for if my intention was to go long. I wouldn't care to buy now, but maybe more when it's a little bit more on the oversold side, showing signs of a support, and again, confirming those 3 stages of a reversal. So I can definitely see why you're paying attention to Meta and watching it, but I don't think it would be the best buy now, especially if markets do begin to pull on back after reporting earnings. Now, of course, if Meta, when it reports earnings, exceeds expectation, that's a coin flip. I can't predict that. I don't know if it's going to exceed expectation, but if it does, then yes, of course, it could end up making new highs. But that's all based off of its earning reports and its guidance that is yet to be released. DJT, I feel like we kind of have to do that. There's a handful of you guys that are asking me to break that down. And the reason I say that is because DJT has gone through a very aggressive rally last week. I cannot stress this enough. Now, let me make this super, super clear. I think most people learn best from their own experience. With that being said, DJT, right? I don't care if you're a liberal, I don't care if you're a Democrat, conservative, Republican. It doesn't matter to me. You might love Trump, whatever the case might be. You might hate him. This is a stock. It's a publicly traded stock, right? It's not personal. It shouldn't be based off of your belief. At least it's not for me. DJT has a 100% failure rate with these pumps. Every time it pumps, it dumps. Pumps, dumps, pumps, dumps, pumps, dumps. I feel like the way that I look at DJT is depending on how Trump is doing on the polls. If Trump wins this presidential election, it wouldn't surprise me that DJT could skyrocket. Not because it's a successful or valuable company, because if you've ever looked at its financials, you would know that DJT does not show any support or any grounding on why it's worth $5.92 billion. But guess what? It doesn't have to make sense. We live in a time where a lot of this value can just be fixated on the individual that runs the company. And in this case, it's Donald Trump. So yes, it is rallying right now. Do I think it's a safe buy? Heck no. This is an incredibly risky stock. It's super volatile and it's coming off of a rally. Can it go higher? Yes, of course, but there's so much pullback potential that, let's say, right? Everyone wants to talk about how much money you can make. I'm just going to highlight how much money you could lose. Well, based off of previous lows and where it's at right now, you could lose possibly 59%. So again, if you want to expose yourself to that kind of risk because you think that you can tolerate it, I'm not here to tell you not to, because yeah, what if it does skyrocket and go to $40? Sure, that's the 35% return. What if it goes to $50? That's a 70% return. All I'm saying is when it comes down to risk to reward ratio, when it comes down to looking at previous patterns and how it always corrects itself after a rally, again, once that hype fades, once that volume begins to taper off, just like we're already seeing, right? The volume peaked, it's beginning to lack progress. This is a perfect sign of a stock losing its momentum. And just like any pump and dump, when that happens and its volume begins to decline, the selling pressure follows and the short sellers begin to print money. They make money as the stock begins to sell off. Now, is DJT an active sell-off? No, it's still above EMA, it's above moving average, and technically it's still a bullish stock. But at these overbought levels, I personally would not want to buy it. I would be watching it to potentially short it. But again, we don't have confirmation of that active sell-off. So you can feel free to share your opinion on what you think when it comes down to the stock. But I just wanted to make sure that I was very open with you on, yes, there is money possibly to be made, but money can be made on both sides. It's not just on the uptrend, but also you can short it on the downside. But right now, again, it's overbought enough. I wouldn't care to go long, but it's bullish enough that I would want to wait for confirmation for it to sell off to consider to short it. The problem that I always run into with DJT, and it might just be based off of the platform that I use, which is Webull, but at these overbought levels, it becomes too heavily shorted that there's not enough shares to borrow. And that just showcases how many people are betting that the stock is going to pull on back. And rightfully so. People make a ton of money when it sells off because it has always crashed back down. So I don't take it personal when I miss out on DJT's pump and crash, because it's just a very volatile stock. And yeah, I've not been allowed to short it so many times that I just almost don't even overlook it. So nonetheless, it's a very interesting stock to pay attention to, and we'll see. We'll see how it continues to trade. I'm excited to follow up, and I'm sure that we'll talk about it in tomorrow's live trading session. So yeah, that's pretty much it. And saw that one of you guys were asking about Netflix. Netflix reported earnings already, right? Quickly gapped up. I know we talked about Netflix before it reported earnings last week. An incredibly bullish stock. I think it's overvalued. I think it's overhyped. Like, it's not a good deal right now. I think that's very safe to say. And I just wouldn't see why anyone would want to buy it right now when market's this incredibly overbought. There's so much pullback potential. That's great for every investor that was already invested. All power to you if you want to continue to hold. But it's up 11% after reporting earnings, which of course we all know that when that hype fades, then it begins to correct itself. So, but nonetheless, technicals do support you. It's an incredibly bullish stock. It's above EMA and the moving average, and overall market sentiment has been incredibly bullish. But with that being said, for people like you and I feel like we've missed out on the rally. It went from lows of 162 to highs of 766. I think it's pretty safe to say that I've missed the boat on this one. But other than that, again, I'll see you guys tomorrow for our live trading session. It's going to be a very interesting week with all the different companies that are set to report earnings. And then big tech is really going to be reporting the following week to kind of finish off September on a strong note, hopefully. I'm sorry, not September, October on a strong note. So we'll see how that ends up going. Again, if you want to tune on into my live trading session, I go live every single morning, and it also comes with the A to Z video lesson library. It's the second link in the description down below, and especially for all those that have been waiting for a huge discount. If you want $350 off, which is 50% off, the second link in the description down below. I have a little promo code for you in the description, and for the first 10 people, you guys will get 50% off. And if you sign up tonight, you can watch me trade live with the LPP team as soon as tomorrow. And yes, it's a one-time payment, lifetime access, and you'll get to watch me trade live every single day and get access to the A to Z video lesson library that's designed for complete beginners. So I appreciate your time. I hope that earned your thumbs up. Please consider subscribing. And like always, let's make sure that we end the year on a green note. Take care.